Hey guys, Yusuf here. And in today's video, we're going to be talking about how do you want to play this game? Because there's a number of ways to actually play this game, but I'm going to talk to you about my favorite one as well as the other options. Now, I started playing this game 9 years ago, and my only goal was to get complete freedom, to be able to travel when I want, do whatever I want, whenever I want. And I did accomplish that. I lived a life most people only dream of. And I think that's what you're here to do as well. Most people that come to crypto to trade or to invest, they're looking for an escape, some freedom. So we're going to discuss how to achieve that and the best approach for that outcome. So let's get started. Now, the first question you have to ask yourself is, what kind of lifestyle do you want? You can definitely trade crypto. You can definitely invest on the side while having another job, and that's totally fine. It gives you a sustainable income and makes things easier for you in a way. Now, the three different approaches I would categorize the lifestyle is through a trader, swinger, and a long-term investor. Now, these all have pros and cons. So the trader is someone who holds from a few hours to days and requires a lot more screen time. It requires a lot more attention, and it's a very fast-paced environment. The swinger, which is what I am, allows you to hold coins for a few weeks to months, and it's more hands-off. You get to have a lot more freedom to do what you want and to step back, to sleep properly and go out. It requires maybe, I'd say, 2 to 5, 6 hours a day, and that's not every day, because once you've placed your bets, it's simply a waiting game. From then, all you have to do is keep up with the opportunities and make sure you've got your pulse on the market. And then we've got the long-term investor, which lasts from a few months to a few years. Now in crypto, this doesn't apply as much because the only investment worth holding is Bitcoin. The rest are a bit risky. Ethereum might be a potential exception, but every other coin in the market, if you hold it for a few months to a year, you will see 90% plus drawdowns and potentially zero. You'll zero out your investment if you don't sell at the top and buy back at the bottom. So holding for a few years doesn't make sense. And the topping within crypto happens within a few months. So it's hard to say within crypto you can actually hold for the long term, right? You're always in and out between cycles. So we're going to focus on the swinger approach. The swinger approach is the best approach in my eyes, and it's made me the most amount of money out of these two. The problem with the day trader, like I said, is it just requires more time on screen, and I find it a lot riskier. I like the swinger. It's just more hands-off, but you're still active on the screen. And like I said, this is what I've learned, and this is what I preach. This is the approach I would choose again and again and again, no matter what, because it just allows you so much freedom. And one con for the long term is that you can't do this full time unless you have sustainable income or a large enough portfolio that you can live off of until these returns are actually realized. So this is one con of the long term, but I would expect most of you guys watching this are probably more in the swinger zone where you guys want to grow a little bit of capital to a lot, and eventually you can scale to a longer term investment, and you guys can then incorporate being a swinger as well as a long-term investor at the same time. And like I said, the problem here is you don't know what's going to survive, so you have to limit it to one or two of the top crypto coins. Now that's the blueprint for how you want to design your life. And like I said, on this channel, we're going to focus on the swinger approach. Now the most important point in this whole video right here is understanding the playbook. Now I actually have a website. You can check it in the description below. I'm running an offer where I'm offering 50% off to work one-on-one for 2 months. You guys can check the details on the website below for those of you who are interested. And it'll break down everything I'm about to show you in extreme detail. Now, what do I mean when I say the playbook? Well, first off, the market is manipulated. There's no way around it. It's manipulated by banks, influencers, and market makers. That's okay if it's manipulated. It's no big deal. The only problem that comes up is if you don't know you're being manipulated, because you're either manipulated or you're riding with the manipulators, people who are constructing liquidity in a very specific way so that other people can notice and drive the price up with them. Okay, that's what we want to do. We want to ride along with the manipulators. So the market is manipulated. Like I said, it's manipulated by influencers and it's manipulated by market makers. Now, the question you guys will have here is, how can I ride with the manipulators if I'm not part of the in-group? This is the beauty. You don't have to be part of the group to actually ride with manipulators. All you have to do is decode the market structure. A lot of my strategy here revolves around being able to read a chart, because a chart, what it shows me is intention and liquidity. It shows me where people are placing their bets so that they can reap the rewards. If you can read a chart, it's not just bars and graphs, it's human psychology imprinted onto a chart showing me where things are going to be moving in the future. So you have to learn how to decode market structure to understand where things are going to move. Because the markets aren't random, they actually have playbooks. If you've played any kind of games or played any sports, there's certain playbooks they run to have a successful attempt at scoring a goal or winning a game. It's no different in the markets. They will attempt to construct a certain pattern that repeats over time again and again that has a success rate of achieving certain results. So let's call one of the patterns a consolidation pattern. They might run that consolidation pattern 10 times. Out of that 10 times, it works 6 out of 10. That's a good enough strategy to make a lot of profit depending on how far that coin runs. And so far, I've got a handful of strategies that I've identified that have repeated themselves over enough charts that I have identified it as a certain playbook. And you understand this through observation of the market to pair it with pattern recognition, but you also need market experience, because without those two, you simply don't trust what you see until you see it happen again and again. And once you begin to profit from it, you gain even more conviction. So now I rarely trade without seeing these patterns in these charts because I have no edge otherwise. My edge comes from knowing these patterns, knowing these playbooks, and trusting in them enough to stay invested and reap the rewards eventually. It might take a couple of weeks, like I said here, to a few months, and that patience grinds on people, especially when they don't know why they're trading a chart. Extremely important. And as I said, understanding this requires experience in the market, it takes time, and pattern recognition. If I had someone to show me this stuff when I first started, I would have gained a lot more money a lot faster, because it shortcuts the experience between having to go from unprofitable to profitable instead of having to learn all this by myself. No one showed me these patterns. It took a lot of time for me to construct and see. And at this point, I've constructed a name for each of them, and I have my favorites and go-tos. So you have to learn how to read a chart. And it might seem daunting if you've never done it before, but after a few attempts and doing it over and over again, it does seem like a second language. The reason why the charts are so important is because on the chart, you can't hide the money. People lie, charts don't lie. You can see exactly if someone is buying an asset. You don't see who's buying it, but you see interest in it. So that's why it's so important to be able to read a chart. A chart is just human intention. It's printed via candles. What you're reading is people's telegraphed intentions. So you're reading what they're setting up for before it happens. Once everybody is in, because you can't just buy a coin once and expect to get filled. Otherwise, it will trigger too much attention and people will simply buy and front run you. So how these people buy is they buy throughout time, which creates these patterns that people like me identify. And once they're positioned, people like me also see it, because there's more than just me buying these coins who have identified these patterns. There's other people. And once there's enough buying pressure to where it becomes so obvious, the chart just runs, right? So that's the kind of game we're trying to play here. And for those of you who are interested in coaching, that's what I'm doing here. I've built a framework of investing by decoding their framework. And I've seen it used time and time again. And this is something I can share with you, and you'll be able to see it for yourself that it works. All right, so this next point can either be viewed as a pro or a con, and it is information is everywhere, and that's true. If you go on Twitter, if you go on YouTube, or if you go on Instagram, there's just people talking about the same topic you're interested in, and there's 1,000 of them. So the reason why one of them is a pro is because you just get a lot of information, but at the same time, there's a lot of noise. Now, your ability to be able to identify alpha from noise is now a skill, and the people that can analyze information in depth and find hidden connections have the most edge. When you learn to connect the dots, you'll see things before other people do. There's people out there that are better than me at analyzing the fundamentals of projects. However, I have the other skill to be able to identify whether the chart is telling the truth. So I'm able to verify whether that information is correct. Now, I will go ahead and look at someone's information. However, if the chart doesn't match up with what they're talking about, I will be no longer interested, because they might be right, but the timing might be wrong. And I'm not willing to wait years for a project to connect the dots and actually fulfill what they're promising when I see another setup that I know is likely to work in a quicker time frame. So being able to read a chart properly helps me avoid opportunity cost. So another pro of having information be everywhere is that you yourself don't need to be a genius. You just have to identify the other smart people in the room. People share ideas. They want to grow their brand. If you win, they win, because they get attention and credibility to grow their followers. That's typically what people want. However, hype is sometimes manufactured, but that's okay as long as you take profit on the way up. Just because you see a move that you think is hype doesn't mean you can't make money off of it. Now, the problem with hype is that usually these moves are constructed in a way where the pattern doesn't have enough time to go. So I've seen plenty of hype plays that I've missed because my framework works around more constructed, calculated plays rather than hype. But the good thing about my framework is that I've seen time and time again when I've missed a coin based on hype, a few weeks later, it just simply goes down. And yes, while I did miss the run-up, I also avoid the painful drawdown that comes. And I'd rather wait for a play that I can trust rather than gamble on a coin that I don't have a roadmap for. I like to have a roadmap to know where this coin might go so I can take profit efficiently as well as risk efficiently. Now, currently, with where we're at in the crypto landscape, only a handful of projects can actually sustain high valuations. Right now, we're seeing Hype as one of the projects that is able to sustain a high valuation. There are a handful of others, but for the most part, it's a very hard arena to buy and hold. You have to be constantly finding projects that are low in valuation, but get hyped up, you sell them and rotate into other projects and continue that game. This could change. In 2017, buy and hold was a strategy. In 2021, buy and hold was a strategy. In 2024, 2025, and 2026, it's simply not the right strategy. Now, this is why it's extremely important to understand the playbook. I know there's a lot of moving pieces here, but once you start to get used to implementing one after the other, it becomes second nature. Now, the third point here is crypto thrives on speculation. Bitcoin is the exception. Bitcoin is simply trying to detach state from money, and we're on the path of accomplishing that as more people accept Bitcoin worldwide. But for the rest of the market, we're simply speculating. Things might have potential. They haven't realized that potential yet, but as long as it has a sexy story, things will get valued higher and higher. They need attention. And with those combined, you tend to see people bid on the same projects that are able to garner enough attention. Right now, we're talking about AI. AI is taking over the world. So people are looking for AI projects to fit the narrative, to bid on that because the story is sexy. So crypto thrives on speculation. Will crypto have an Amazon or Google moment? Well, I think a lot of people are betting on that. This is what's going on here. People are looking for the next Amazon and Google and hoping they can capture that opportunity. We don't know if it's going to come yet. We have to wait and see if some use case is able to come out of the blockchain space. As of right now, we're struggling to find something. DeFi is being attacked. It's being hacked with the rise of AI. So things are looking kind of shaky within the crypto sphere. So we're still experimenting there. But until we see the first one, we have to treat it as a speculation game. Though they may currently exist in the space, we just don't know which ones are going to come out on top yet. For us right now, that doesn't really matter because as long as the patterns exist, as long as we can see the playbook, we can simply trade them and rotate and continue stacking cash. And eventually, once we see one Amazon or one Google come out of the crypto sphere, we'll be able to catch the next one. It's kind of the same thing with what happened with Bitcoin. Once we saw Bitcoin was a success and it was able to catch the attention worldwide, we saw Ethereum come out and actually make a move. So we'll have to wait and see the same thing happen with the altcoins. Is an altcoin able to do so? As of right now, I think Solana was able to breach that space a little bit by going from a tiny market cap all the way to number 3 at some point in this cycle. So that's something to keep an eye out on. However, it hasn't been able to sustain its price, so it's hard to say that that's the Google or Amazon. Now, the other thing we want to talk about is why do people fail in investing, right? One of them is boredom, forcing trades. They're not able to sit on their hands. It burns valuable capital for when the good times come. So not being able to wait for the trade to come to you is a problem for a lot of beginners because there will simply be conditions in which you can make money and conditions you cannot. Now, you can't change anything with that. You simply have to wait until conditions approve. Otherwise, if you force trades, they're most likely not going to work because the risk appetite simply isn't there for people to buy. So it's just you trading against the market, which has no risk appetite. And that's a formula to fail. So you have to be aware of that. Also, a lot of people have bad risk management. They have an all-in mindset on the market, no cash sitting on the side. So when dips come, they end up not being able to bid on better potential entries because they're already all in. They've just been invested and their psychology gets flipped on its head. And now they're looking for an exit at a lower price or a break even. So with no proper risk management, you will eventually lose it all because mathematically, the deck is stacked against you. So you don't want that. You always want to have cash on the side to be able to bet. You also don't want to have too many bets at the same time because the market can flip like that and you won't have any recourse unless you decide to sell your bags. So within my program, I do preach a lot about risk management because I've learned firsthand what bad risk management will look like. So I've designed a system to survive and thrive rather than to maximize profits. Yes, there will be a time to maximize profits, but the market conditions will have to show its hand before we're able to do that. Now, let's talk about borrowed conviction. Now, this is something I see a lot in the crypto markets, mainly because a lot of people don't do this full time. There's only a handful of people who have been here for years and are able to invest and then simply sit on their hands and wait. A lot of people look to influencers to give them the trust and conviction they need. I see people asking like, is this still a good play? Do you think this can still run? So that's what I mean by borrowed conviction. Now, don't get me wrong. I do use borrowed conviction as well. Like I said before, if I see an influencer talking about a coin and he's done his research, all I have to do is go to the chart, verify that the chart has a playbook that is in my framework, and then go research the project. And if I'm convinced, I will buy into the coin. But I rarely enter without a playbook. I have to see the playbook for me to enter. Now, the con of borrowed conviction is that it fails when price starts going down or investment takes longer than expected. So people will not know what they're invested in. And when price starts going down, so does their conviction. It's actually completely tied to the coin, which is not a great thing because price might take its time to go up before they're able to hold out for price to do that. So you don't want to see that. That's not what you want to do because you will lose most of the time. What helps in strengthening your conviction is actually researching the project, gaining an understanding of its value to help you withstand the drawdowns. If your conviction changes with the price, then you've got a big problem there. And for the perfectionists out there, let's talk about trying to predict a top and bottom. The thing is about trying to predict tops and bottoms is that you won't know it's a top or bottom until it's been done already. So I don't try to pick tops and bottoms. I think that's a fool's game. Instead, what I try to do is get close enough so I can get my value out of my investment. I'm not looking to be an engineer with this. You can definitely analyze the chart for signs. There are signs that a coin has topped. Oftentimes, you'll see signs from another chart that says a coin has topped. Now, because this is a speculative game, a lot of the charts will have similarities where you can extract information, and a lot of people don't do that. I don't see that much talked about on crypto Twitter, but you can definitely look for similarities between coins in where they could top or where they could bottom. When I was investing in Bitcoin in 2021, I remember missing the bottom because I tried to predict exactly where it would go, and it ended up running from 3,500 all the way to 14,000, and I thought I missed it. However, at the time, I had enough experience to know that that quick of a move usually gets a correction, and shortly after, we had a huge downturn in 2020 with the worldwide crisis, and price ended up dropping down from 14K to 3,500 again, and I got my buy at around $4,000. And for me, I was close enough to the buy-in, and we ended up running all the way to 60,000, and that $500 difference didn't really matter then. So that's why it's important to not get obsessed and caught up with buying the top or bottom, right? So that's the video for today, guys. I hope you found a lot of value in it. And if you guys are interested in shortcutting your success from going to an unprofitable to a profitable trader, make sure to check out my website for one-to-one coaching. I am running a discount for the first 3 people to sign up. We'll start off with a quick call to see if I can help you with your problems and if we're a good fit. So if that interests you, check the link out below. But as for now, that's it, and I'll see you on the next video.